Criminality has been rampant within the financial system, leaving the technocratic elite cheering and individuals left holding their gift-wrapped garbage. 1980 was the beginning of the takeover of the financials, and since then it has accelerated to a point where we nearly faced total economic collapse. Look beyond the surface of the information you are presented with and seek the truth. You came here for the truth, so let me unveil that for you. Today we are going to look at 7 charts which show the financial crisis part 2 is on. Let's get into this and much more today, beginning with this article here out of Bloomberg. For more than a year, dealers in the U.S. equity derivatives, my favorite market, have noted that a widening gap in the price of certain options. So, to get into what that all means, you can read it for yourself. But look at this. New research suggests the divergence is a consequence of financial institutions hoarding insurance against declines in stocks. So, they cause the problem and then they buy insurance just in case, that's just in case, the stocks begin to decline. Where have I heard this happening before? It is history repeating all over again. You don't need to be a genius to figure this out. You don't need to be in the financial system to figure this out. You don't need to be the Emperor Obama to figure this out. Watch it all being replayed. Think of it like it's a DVD or a Blu-ray. You've watched this movie before. It's the same exact disc being played. It isn't even a continuation of this series. It's the exact same movie being played before our very eyes. All right, let's get to some charts here. World energy consumption and GDP growth in 2010 dollars. So the blue line is energy, the red line is GDP. I'm noticing a striking similarity right here. And this is very obvious as we see over time. It goes back into 1972 up until approximately present day. And we can see this here. Obviously, the world has this consumption of energy, whether it's oil or other things, and that goes aligned with the GDP, whether it's growth or whether it's sinking, what have you. And this basically suggests that during recessions, you have less energy being used, and during the growth spurts, you have more energy being used. Interesting to note. Let's move on to this. World GDP growth divided between energy growth and efficiency/technology growth. So once again, we have another chart for you to look at, and I'll just say the same thing essentially, that where you have technology being used here, we also have the, let's call it, expenditure for energy. This goes back, in fact, to around 1820. So this is interesting when I see charts dating back that far. Of course, there are a lot of things that come up here where you could say it can go one way or another. It doesn't matter. This is all I'm trying to say for this chart. Then we look at what I show you in my book. The Dow Jones Industrial Average from 2011 up until, let's say, around 2000 to 2011. And this book obviously was written prior to 2012. And what we are presented with here is the fact that it can take a long amount of time for the stock market to regain what it did before. So if that day was today, if the day began as, let's say, 2000, and it wasn't going to be another 10 years before you could make your money in a single dollar, a single share, would you still invest in that particular asset? That's the question that I ask. Let's look at this. China energy consumption by fuel. Obviously, coal being central to their energy expenditures here. But there are others coming up. We can see oil obviously rising. We can see hydro being used, natural gas. But coal still makes up their real central usage here. Now, we can see, however, that things aren't the way they were in China anymore. Yes, they are consuming more now than they did, let's say, 20 years ago, but it certainly has been slowing down. I've been showing you the case here. The China Employment PMI is the chart in the graph line here in red, and the Aussie employment change. Now, what we had here, particularly in these type of industries, energy industries, is an increase, temporarily here at least, of the amount of Australians being employed in this sector. Very strange considering the fact that China is suffering a little bit at this time. I don't know if it's a temporary blip, but this is one that I wanted to mention so that you can keep an eye on it. The Australian dollar, the Canadian dollar, getting weaker. What else is new? We are definitely feeling that whenever you try to buy something from the United States. I'll tell you that firsthand. And you can see the divergence here as you see the declines right here with all of these different graphs on the right, bottom right here. Growth in inflation, adjusted world debt, and GDP. All I'm trying to say here is that if you expand the amount of debt, you expand the deficits, you increase every method of spending and purchasing all done by government, make the government bigger essentially, then your what they call real GDP can increase. When debt goes down, when you start to, let's call it deleveraging, you're going to have this declining as well. It's pretty obvious that what they call economic growth is based heavily on how much debt they are willing to get into. Well, that's all I'll say for this video today. If you found it informative, please give me a thumbs up. And last but not least, you'll definitely want to check out my book, and you can flip through it. If you go over to Amazon, they have a look inside feature, which allows you to look through the pages of the book and see if you like it. Take care.